Hey guys, it's the Growth U team here today to talk to you about our new deal. Samson, Brad, kick us off, guys.
Well, we got a sweet deal in Dallas, Texas. Working with another co-GP group, Symphony Capital, here out of San Diego. Both Jeremy Cisneros and I know them very well, very close friends, and Jeremy does underwriting for them as well, and a lot of the CFO finance type stuff. So he's intimately familiar with the deal. One we've been working for the past couple of months, and it's probably the best market that we have seen to date, being in Texas and then being in a fantastic suburb of Dallas, Texas. So just the market alone makes it an incredibly attractive deal. And then the submarket is like this beautiful cherry on top. And then the asset is just gorgeous. So pretty excited about it. I'm really excited to put my own money into it and get this deal across the line because I want the return above this bad boy.
Speaking of that, Jeremy, there's some updates to the return profile as of yesterday, right?
Yeah, a couple highlights on lengthy conversations yesterday, just kind of going through the model again. We hadn't updated it. We have not updated the model since originally going under contract just to keep it memorialized. But the market's moved so fast, we thought it was worth it. And so from a high-level perspective, the rents from the one bedrooms that we originally underwrote to 1309, they're actually capturing today 1409 for those one beds, some leases that are coming in. So putting that as a target for year one, which is a big improvement. And then for the two bedrooms, 1695 compared with 1645 that we saw almost 4 months ago. So that's the big kind of piece there. A few other ones were other income, washer dryers. There's hookups in all of these, pet fees and pet rents, and storage lockers and pest billbacks and rubs billbacks. So all these things are really added up. The kicker on all of this is that we're no longer going to be using a pref equity group. We're going to be going directly to all of our retail investors, and that really helps alleviate some of the cash flow. And the final thing was that instead of purchasing a 3% cap, we are toying with the idea of purchasing a 2% interest rate cap, therefore kind of buying in the money today. It's a lot more expensive, but it also creates some more cash flow. And the idea there is to start paying investors starting month 13, a 5% dividend on the money. So the pref is still going to be a pref return of 7% that accumulates, but we want to try and we have forecasted the ability to start paying current pay 5% in month 13.
And that month 13 is significant because we're given that buffer time to do the final capital expenditures. Out of the 200 units on this deal, there's 58 that still need to be fully rehabbed. So that first year, all the capital expenditures will be going into doing those rehabs and getting this property fully stabilized and then cash flowing at peak performance. So that's pretty exciting that we still get to add a lot of value in the first year and then really bump those rents up as much as we can by that 13th month.
Yeah, so guys, at this point, we could just go around and each of us share our perspective on why we really like Dallas and the suburbs around it, and Texas as a whole. Maybe Samson, we could start with you. We haven't heard from you yet.
Yeah, I mean, one of the things about Texas in general is it's just so vast and has so much room to continue to grow, which is why Dallas Fort Worth has been the fastest growing MSA in the entire country for like the last 10 years. And it has 7.3, 7.9 million,
almost 8 million. Yeah,
almost 8 million people. And just for perspective, this entire state of Colorado has 5.85 million people. So there's more people in Dallas Fort Worth, 2 million more people in Dallas Fort Worth than there are in the entire state of Colorado. So that means tons of jobs, tons of people, tons of well-qualified tenants. And then you you take that and you go look at Allen, where this property is actually located, which is one of the nicest submarkets of Dallas Fort Worth, and you start getting really excited about where it's located. There's maybe a little bit of caution out there with the changing interest rate environment, but the reality of it is you're buying the market, and then within that market, you're buying a great asset. And so, yeah, I feel great about it. It's probably not going to be the, sexiest cash flow deal on the planet, but that's not really what the strategy is you're in a high growth market and you're buying a stable asset. So you feel real comfortable about putting your money to work in that market and that asset, and knowing that in 2 to 3 years, you're going to get a high yield on that.
That's great. Jeremy, what about you, man?
Yeah, specifically, Allen, Texas. I don't know if the numbers. I've been tracking them almost weekly. The home prices, the rent prices. We've seen it as high as 38% year over year growth for homes in this immediate submarket. As of lately, it's cooled down a little bit to maybe a 33%. So still outpacing the I think national average and historics, even in these couple of supply constraint years. So it's still a hot market. In terms of the school district, maybe Brad can touch on that a little bit more. He's been doing a ton of research, and it's just the amount of employers, high income paying jobs, and the diversity that Dallas has created. You can't speak to it enough. You just consistently see a lot of these Fortune 500 companies moving this way, and Allen is right sandwiched between that Plano McKinney area, which you hear so much about, and these assets trading at such crazy numbers today, price per pound, but it's sort of become the norm in terms of where everything is because of the high value and demand.
And we see a lot of interest right now in commercial multifamily and hard assets, because we've seen inflation go up over the past couple months like crazy. The rates have gone up to try to counter that inflation. We saw crypto take a nosedive a couple months ago, and now my crypto account's like a third of what it was just a couple months ago. So a lot of people are looking for stability. My Roth IRA and my government retirement all went down in double digits over the past month, which is painful. So that's why I'm looking to move as much of my funds out of that and into hard assets as possible. So people are looking for stability. Right now, it doesn't even have to be super high growth, because people have to remember that like super high growth also equates to super high risk. So anytime you take a high risk, there is a high possible return profile. But what a lot of people and a lot of investors are looking for now, and there's more capital on the sidelines than there's ever been before. Family savings accounts are the highest that they've ever been. So people are looking for just a safe and steady place to put their money where they know they're not going to lose it. And we look at the return profiles for commercial multifamily investments over the long term, over a 30-year period, and there's rarely been negative years, and the positive years vastly outweigh the stock market. So for the people that are looking for a little bit of stability in their life as the market's going a little bit of crazy, there's always talk about recessions. This is like that hard asset that you want to plant your money in for a little bit of security going forward, especially in the next decade. What's also cool about this asset, and is very unique in this market, is the submarket of Allen, the town, put a moratorium on any new builds for garden style apartments. So it's one of the only garden style apartments that are in this area. They're not building anymore, so there's not going to be a crazy amount of competition from new assets being built, new A-grade assets coming online. So once we get this one up and stabilized, it's not going to have a whole lot of competition coming back its way. What's also really cool, it's literally right next door to Allen High School, which has more students in it, and only 10th, 11th, and 12th grade, more students in it than my university, the Naval Academy in Annapolis, Maryland, by 1,000 students. They have 5,000 students there. Their football stadium looks, bigger than the Naval Academy football stadium. This is just high school. And the unemployment traditionally in this town is 0.3%. which is really awesome. And when people talk about going into recessions, unemployment always comes up because unemployment is one of the biggest factors of, am I going to be able to collect rent, and am I going to be able to make money on this asset? So what we look at is submarkets that have very, very low unemployment, and those workers are the least likely to lose their jobs or to get pay cuts in any recession. Even 07 through 12, the hardest hit demographics were wage workers, so people that get hourly paychecks. But the workers that are here, most of them work for these Fortune 500 companies, of which there's 23 just in this Dallas metro, and huge names, everything from PepsiCo, USAA, Toyota. So just a lot of big companies there that really bolster the economy. And then what's cool, just from a macro standpoint, is a lot of that manufacturing that used to be overseas is now coming back to the US. And one of the biggest states for that manufacturing is Texas. So even some of the lower grade jobs are coming back to Texas. So we're going to see a pretty big boom in manufacturing in this area. And Dallas is like the mecca of the South for manufacturing and production.
Yeah, that's descriptive. You taught me some stuff I didn't even know. For me personally, when it comes to Texas, looking at the data, it's the 9th largest economy in the world. So as far as America, like, it really is a powerhouse. And one thing I personally love, like, I know you brought up like the crypto portfolio, Brad, and obviously everyone that knows us for when we talk, like, as the Bitcoiner, I love Bitcoin because they do have their own energy grid, and there's a lot of jobs and innovation coming to Texas because of that resilient energy grid. Because as we know, energy is what really drives production costs of everything. That's what drives up the price of gas, like producing food. So I love Texas for that reason. I believe people will continue flocking there. And like you shared about Dallas, Fort Worth, and Allen in general, it's an incredible area for schools. And one thing I know personally, being someone who is conservative, I think, in terms of my finances, but liberal as far as like my views of the world, a lot of people I feel like are kind of in that rational middle ground. They're not really on these political ends, if you will, as much as we see in media. And people really do want to travel to where their kids are going to be positioned for success. So like, I think schools and just high income earners that have the optionality and the ability to migrate and be where it's going to be best for their children and for their own livelihood, I think is going to be even more important as time moves on and our nation makes decisions. So Samson, I saw you on mute.
People like this asset because the home prices are so expensive in this area. They want their kids to go to a really good school. So they end up living in an apartment, garden style apartment like the one we're buying, because it has very nice amenities where mom and dad can work from home comfortably. And it's on a huge amount of square acreage. It's almost 13 acres that this sits on. So a lot of green space for outdoor activity. A lot of amenities like dog parks and pools. There's two pools and a tennis court. So it makes those families who can't quite afford a single family home feel very comfortable. And their kids can go to a great school in a safe spot without having to jam into a really tiny house or have to be far away and in another school district. So we see a lot of people flocking to this multifamily, really, I would say, comfortable apartment living, just because of ease of access and ease of living for the entire family together.
One note too, the piece that we put out earlier today about the Allen market and just Dallas in general, the Yardi report showed that 4 beds were, I think, $550K median price, and then the 5 bed with the work from home culture we have now, it jumps to $657, like a major leap compared to 2, 3, 4 bedroom leaps. And when the 5 beds get priced out, people are forced into the 4, and naturally there's like a waterfall effect, right? So I think with the work from home culture and all of the points you just alluded to, that really does give people a good option to have an affordable, safe place to live. And we also covered this week in our content that a lot of people in their living situation, they really do want to live in an area where they can experience the lifestyle that they see online. And this platform, but the asset that we purchased, it does have an incredible lobby, the tennis court, some additional things and just amenities that you don't find at every apartment complex out there. So I think that's a key feature that's really exciting for people, especially when touring the place, to have those amenities.
For sure.
Yeah. Those amenities to touch on, asset level specific, part of what we love about the property itself is that the prior owners have put in above $5 million into the asset, have taken tremendous care of it. A lot of the CapEx on the exterior, on the common area, the fitness center was just finished out. And so what we're going to be doing is going in and renovating those final 58 units, which is only 30%. Alongside of that, at the same time, the sellers haven't put and pushed the rents as hard as they potentially could have. They're not really keeping up with the market. So above what we have projected are higher comparables in the market that we're not even really needing to achieve in order to get some of these great returns that we have forecasted. So amenities and overall just strength of the other surrounding apartment communities really help bolster this entire area up.
Guys, Samson, did you have something you wanted to share? I saw you kind of unmute and then mute about a minute ago.
No, it's just agreeing. I don't know if I could say more. I did the webinar.
Yeah.
We're putting our money into it. We're bringing our investors along.
No one's. Has anyone mentioned our price reduction?
Yeah, that was big news as of last week. Getting $3 million off the initial purchase price, which just helped sweeten the deal even more. And we've already engaged tax personnel that can go and litigate against increasing taxes as well, and projected out all those over the next couple of years. So with the additions of all the extra rent that you were looking at and all the extra income that we can get, like you mentioned, the deal just keeps getting sweeter and sweeter. And usually these start going the other way. You start uncovering expenses and more problems. But as we keep going into this deal, it just kind of keeps getting better and better. So appreciate that, Jeremy.
Yeah, part of what we'd like to do is get refreshed taxes along the way, because Texas, you really could get bitten. So I also did update that as well in our model yesterday on the more conservative high side. The cash flow still ended up being higher due to all those other areas that we mentioned that we weren't necessarily doing as good of a job optimizing. And we also hopped on the call at the end of the day last night to go over with our regional, who's going to oversee the property manager, who's implemented this type of business plan across thousands of units in her 20 plus career. And she's very confident. We kind of messed around with, what we think we can capture for covered parking, uncovered assigned parking, all the nitty gritty, just to make sure, okay, this is kind of level that we can feel really comfortable about and push to at the end of the day. So I can talk about numbers in this deal all day long. I won't bore you too much, but you can always reach out if there's more questions there.
Yeah, and what's the most important thing for investors to know is that our biggest investor is the bank. Coming in at 70% of the deal is the bank's funding it, and the investors and the principals are only bringing 30% to the deal. So if the bank likes the deal and loves the deal and is willing to lend on the deal, that's usually a really good sign that we have a good deal available, because the bank wants to make money as well. So we like commercial multifamily real estate because they're also non-recourse loans. The bank doesn't want to be in the position of having to manage assets, so they really try to help us along the way and make sure that we can have the cleanest operations as possible, the most efficient operations as possible, and everybody's having way more fun when we're all making money.
Yeah,
well, awesome. Right. Well, appreciate everyone who's watched and tuned in. If you want to chat with the team, schedule a time to call. We do have an updated button on the website for this deal where you can register for the portal, log into the portal, and see the webinar, some of the numbers, and there's the ability to schedule a call with Brad, who will be your point of contact. So if you'd like to do that, feel free. We'll have the notes in the YouTube below in the comments. But anything else final we want to share, guys, to pass along before we hop off?
I'll just say that this webinar and this deal is brought to you by coffee. I've been up since 5 o'clock every morning and go to bed at 10 o'clock every night just because of the volume of phone calls and emails and interests that are coming in. So I will try to get you as quick as possible to answer any and all of your questions. But that should also be a strong motivator that we think this is going to get fully funded very quickly. So we encourage you to register now. It's a very quick process to register. Then jump on a phone call with me so we can just cross your T's and dot your I's and make sure you're excited about this opportunity. You're fully educated on the opportunity and know all the upside and know the full breadth and depth of how awesome this place is and how much we love it. And then we want to make you successful and help you reach your investing goals, your freedom of time goals, and your freedom of money goals. So that's what the whole team's here for. And Jeremy can help get into the weeds on numbers if need be, and Samson can help talk about any of the other high level stuff, but happy to get on and help you in any way possible. And my email is brad@thegrowthview.com. And you can shoot me an email, or my phone number is area code 828-446-4813, and shoot me a text and I'll get back to you as soon as possible.
All right. Thank y'all.
Thanks so much.
Appreciate it. See you guys.